Now. Angie must have come back in. Welcome everyone to our Jewish Family Service Bank webinar on the topic of predatory lending. And we are very excited to have Susie Stonecipher with us to talk about our topic of predatory lending and how to end bad loans and build credit. We're so glad all of you are here. And we will get started in just a moment. I'd like to introduce you to Susie. Susie Stonecipher is a senior relationship manager with First Horizon Bank. She's been serving families and their related interests in Dallas, in the Dallas market since 1985. She moved here from Louisiana, where she obtained a Bachelor of Arts degree at Louisiana Tech University. Susie has worked with nonprofits specializing in fair credit and a moral economy for many years. And we welcome you, Susie, and thank you for being here today. So I'll kick it over to you.
Thank you very much. I appreciate the invitation to talk about this because this is one of my passions as fair credit. And as Brenda said, I've been working in banks actually since I got out of school in 1980 in Shreveport and have a real interest in wishing that traditional banks provided all the services that people need with regard to small dollar loans at a reasonable price. But I'll have to say, as an employee of a profit-making organization and not a nonprofit organization, they have to price things the way they do to make it make sense. But I was really pleased today when I looked up what First Horizon offers. They have a loan that can be as low start as $2,000. I think in the past it might have been $5,000, and a lot of times, you don't need to borrow $5,000 if you don't need $5,000, right? A lot of times people get into predatory lending issues because they just need $500 or $600 or $800. So that's still less than the $2,000. But I was also pleased to see that the rates that we provide for those loans, depending on credit score, could be between 11% and 13%, which also seems like a high rate, knowing that the prime rate that banks borrow at is 3.5. It seems like we're gouging the consumer, but from a profitability standpoint, that's really pretty much a fair rate, especially in the context of what we're going to talk about today, which is predatory loans. I worked with a nonprofit in Dallas called Faith in Texas. Faith in Texas tried to combine the voices of faith groups to cause elected officials to do something about predatory lending. And they chose the topic of payday loans because it was pretty much unanimous that everybody hates payday lenders. The only people who don't hate payday lenders are payday lenders because they absolutely gouge the people who are least able to pay the enormous rates that they pay. So I have put together it's been a while since I've done a presentation on this because COVID and other things have just caused me to get rusty, but I put together a slide, a set of slides. And so let me get that up so you can see. Let me share that. Whoops, where did it go? Is it? Can you see? Should be screen 2. Oh, wait, here it is. Can you see the little cartoon? Oh, I have to share. There we go. Now can you see the little cartoon with the, okay, good. So that's just an illustration of what payday lending is like. It is really a collection of businesses whose job it is to provide these small loans, but also make sure that you never really pay them off because they make more money if you never can pay the loans off. So that's sort of a artsy example of that. So let me move this over here so I can see my presentation. Okay, so the first rule, I guess, could I just get a heads nod from anyone who's ever had a payday loan or has had a family member with an experience with payday lending? I don't see anybody yet. Hello there. So one of the first rules of payday lending is don't get a payday loan. A lot of times people get caught up in payday loans because they need something and they're not afraid, but they're just embarrassed maybe to go to a relative and ask again for a loan, or to go to their employer and ask for an advance on their paycheck, or to use resources that they have, because the payday lenders make it sound so easy to just walk in and get a small loan. And you'll see them advertise at the holidays and advertise at vacation time. Oh, you want to take a nice vacation? It's so easy. You just come in and we'll just give you money. And so people, instead of using resources that might be a little bit embarrassing for them, they'll walk into a payday store, and the next thing you know, they've gotten themselves wrapped up into something that's going to last for years, and it could be their financial demise. A lot of times, payday loans start out fixing a Band-Aid of a problem. Let's say you have to make a rent payment. You get that rent payment made, but then next month, you've still got another rent payment to make, and now you've got this payday loan where they're making you pay exorbitant amounts of fees to churn that loan every 2 weeks. And so now you're in a worse position than you were before the payday loan. So it's not usually, it's not ever really a good solution to go to a payday lender unless you've got a money coming in 2 weeks that's going to pay that off. The worst thing that could happen in that situation as well is if you go to an auto title loan lender and you pledge your car. And that's happened so many times where people need $500 and they'll go pledge a car that's worth $4,000 and they don't make their payment, and then their car's gone, and that's their only way to get to work. And so then they're in another pickle because they owe the payday loan, the auto title loan, they lose their car, and now they've lost their income. So there's just no good outcome for going to a payday lender. Part of the problem with payday lenders is their business plan is that you are going to fail. It is no secret. And in fact, it was discovered when Ace Cash Express was having employee training. They had a little page in their employee manual that was a circle that said, John Brown comes in to get a loan. John Brown can't pay the loan back. John Brown pays a fee to keep the loan going. John Brown gets a new loan. John Brown, and it's a cycle, and that was their business plan. And they actually got convicted of a fraudulent business plan there, because that's targeting the demise of clients, and they had to pay a $10 million fee or a penalty for having that in their training program. But generally speaking, that's really how it works. That's how they succeed. So from my perspective, it's not just bad for the consumer. Anytime there's an industry whose success is dependent on the failure of its customers, and it flourishes, the worse its customers do, the more it flourishes, that's not just bad business, that's immoral. And we should not be allowing our elected officials to encourage that and subsidize that, and that has happened. So that's why I stand on this soapbox. I don't want anybody going to a payday loan. There are alternatives, and we're going to get to those later on in the presentation. One thing, when you think about payday lenders, this was interesting to me that during COVID, when the customers of the payday lenders were at their worst situations needing money, the payday lenders went in and got those PPP loans that were guaranteed by the federal government. Payday lenders are not in any financial trouble whatsoever. They're very, very profitable businesses and always have been. But they were able to, because they didn't have to provide proof that they needed the funds, they could go in, and this slide shows that they got millions of dollars of payday loans, which were forgivable loans. So they never had to pay them back. And so meanwhile, while they were getting these loans, they were providing loans to their customers at exorbitant rates. So the federal government was in fact subsidizing the robbery of interest from the consumer. So that's, again, not a savory subject to think about. I don't know if you know exactly how a payday loan works, but what generally happens, or an auto title loan, you go into a storefront and you'll say, I need to borrow $500. They will push a document in front of you that you will sign that has a lot of fine print that does not explain easily what the interest rate's going to be, what the fees are going to be, when that money's due, if this and this happens, how much it's going to wind up being. But people will sign it because desperate people will sign just about anything. If your car's out in the street with a flat tire and you can't get a tire fixed without going into a payday lender, and they shove that piece of paper in front of you, who's going to read that, before you get your $400 or whatever you need to get your tire fixed? So you'll sign that, and they'll ask you to give them a blank check that you've signed on your checking account, if you have a checking account. And they'll use that check in 2 weeks to try to debit your checking account for the full amount of what you borrowed. And that's probably written in the fine print, but it's not something that they talk about very much. When that happens, it's going to hit your account, and it's probably going to overdraw your account, because how many people can pay that back the next 2 weeks? If it overdraws your account, what happens at your bank? Fees, and they will probably return that check to the payday lender, and then the payday lender will charge you fees, and your bank is charging you fees. So already that spiral down into financial demise has started with the payday lending loan. Some payday lenders are so evil that they take that check that you gave them and take it to the legal authorities and file a criminal complaint against the customer for having written a hot check, and have put them into the legal system that way. There's been a lot of effort to try to get that outlawed, where you can't do that, and we're successful in some cases. But that can happen where you've got criminal charges filed against you because they've required you to give them a check. So just another reason not to go down that path with them. So then what happens is you will be told that you can roll that. If you can't pay that loan back, you can pay maybe $50, maybe $100, maybe $150 to roll that loan for another 2 weeks. So you're starting to see how this happens. Next 2 weeks, you get the same thing happens. They want their money. You can't pay it because you've been paying overdraft fees at your bank, and you just paid that fee there, and your income's not going up. So what happens? They do the same thing to you, and they say you have to pay another $150. I had a client that I was helping get out of payday loans, and she had a full-time job working for Penske. She had a great job working for Penske, but she had a medical issue. She had to have a medical procedure. She didn't have the money for the copay, which was $800 for the medical procedure. Her ex-husband was willing to help her, and her mother was willing to help her, but she was too proud to go to them to get money. So she went to a payday lender, got an $800 loan. And what ended up happening was she had to make a payment of $180 every 2 weeks to keep that loan going. And by the time we got to her, I don't know how much she had spent, but a multiple of what she got. And she was in tears because all of her money was going to pay this payday loan. So I'm going to talk to you about the source of how to get out of a payday loan, because we were able to do that for her and put her on a payout at 3% and sort of save this woman's life. And but it happened. Think about how many thousands of people this is happening to all the time. Let me see. We talked about the blank check. Oh, also be wary of pawn shops, because pawn shops and payday lenders and auto title lenders work together with each other. If you go to pawn something, for example, and then you try to retrieve what you pawned and you can't, the pawn shop may refer you to the payday lender two storefronts down and say, go over there and get a payday loan. You'll pay off the pawn and maybe get back your ring or watch. But then now you've got the albatross of this other payday loan around your neck that you're dealing with. And then that payday lender, when they get tired of rolling your loan, will say, go over here to this payday lender on the other block. And you end up in a cycle, and all you're doing is just feeding the money to them. So I don't know if I have to do too much more convincing about why this is such a bad thing, but I've just watched it happen so much. And what ends up happening is the fees end up causing these loans to cost like up to 800% APR. A credit card is 25 or 26% APR, and we all think that's too high. Imagine that you have someone who is charging the least able financially to pay that kind of a rate, and you're charging them, 800% on their borrowing. It's just not reasonable, and it's not moral. And you will hear people say, like when we go talk to elected officials, they'll say, the poor need these loans. If those people weren't making those loans, what would they do? They would have nothing to do. And the truth is, we didn't have payday loans in the state until about 10 years ago. And the federal legislators created a loophole that allows them to sidestep the usury laws. We've had very rock solid, historic usury laws in Texas that say you cannot take advantage of the poor by charging excessive interest. But the legislators, with their eyes wide open, allowed these private companies to bypass that law and use trickery, really, to allow this to go on in the state of Texas. So it's very hard to get the legislators to do anything about it, because a few years ago, when I was lobbying in Austin, when you checked, all but 4 or 5 of the Texas legislators were getting money from the payday lenders. So in order to clean that up, you have to really shine a light on the fact that the legislators are kind of in the pockets of some of these credit agencies, and you can get them to move, but it takes a lot of combined voices to make that happen. This next slide shows what's happened recently during COVID with the activity of the payday lenders. You can see that the amount of their loans has gone down a little bit. They were, like in 2012, they made 1.8 billion in loans. It's gone down to 1.68, so it's a little bit of a decrease. But look, in relation to that, how their fees have gone up. So they've been getting $2 billion in fees in like 2019. And those fees, when you think about it, they don't stay in the community. When you pay those fees to a payday lender, it goes into the pockets of the shareholders of corporations outside of our community. This money, if you had been able to not let this money get drained out of our community, this would be money that consumers would be spending at the car repair places and the burger joints and the home-owned businesses. They would be spending this money at small businesses and improving the economy in our communities. These industries suck the lifeline out of our communities by draining $2 billion a year out of, and make sure it's a year. Yeah, it's a year, not a quarter, out of our communities. That's another reason why this is an important topic for all sorts of reasons. And it's not good. It's not good for the population because it damages businesses that would have customers otherwise. We talked about how they try to make these loans look especially attractive around the holidays, and they target certain populations that they feel like are subject to needing small dollar loans. They advertise and they put up storefronts in all sorts of low income areas, in areas that are populated largely by minorities. They target the elderly and they target the military and students. So think about those populations. Those are our most marginalized populations, and they're the ones that this industry is going after because they can just take as much money from them as they want because the people are desperate for these loans. The federal government did decide that they were not going to let them abuse the military. So they put a 36% cap on small dollar loans for the military. And now our argument is if that's fair for the military, it should be fair for everybody. Why are just military people getting a cap? So the next step in our lobbying is to ask for our elected officials, especially at the national level, we want a 36% cap on all these loans for everybody. There's no point, there's no fairness in having an 800% loan. So get on your phone to your elected representatives and make sure they vote for that. Let's see. So let's talk about some of the solutions. Okay, well, here's a slide about auto repossessions. That's the most heinous thing that happens to me, is that taking people's cars, especially when the value of the car is so much more than the cost of the loan. It's such a small loan for losing your car. This is the one that's in a quarter. This was one quarter. 13,113 Texans lost their cars to repossession. So think about all those people who can't go to work and what's going to happen with them after that. You know, it's just not a suitable outcome for any of that. Let's see. Oh, so now we're going to talk about some of the ways that you can avoid getting drawn in, or your clients can avoid getting drawn in. If they can open a bank account, there are lots of banks who have free or no cost or low cost checking accounts. Our bank even does now. Before we had, we had $1,000 minimum on our personal checking account, but now we have checking accounts that have no minimum balances and no fees. You have to have $50 to open the account, but it's a no fee account. And what that allows them to do, or allows you to do, is to go in there to cash your checks. So you're not going into a check cashing place and losing fees while you're doing that. Also, you're developing a relationship with the bank so that if you need a small dollar loan, they're going to be more likely to assist you with that. And if you have credit score issues or other blemishes on your credit record that might toss you out at a place where you didn't have a relationship, if you have a bank account with them, they're more likely to talk to you about that and work through being able to figure out a way to make a loan for you. This next slide. Okay, this is a slide about who's targeted. We talked about minorities and military and elderly and students are the most affected populations by this. And we're going to send you this presentation so you can digest all the numbers if you're interested in that. It's just, it's a sad set of numbers in any case. This is a brochure about how to avoid dangerous loans and who you can call if you have questions about it. Gives you some hints. If you go into a place to get a loan, what are some of the questions you should ask? What you need to do is make sure they tell you very clearly what is your interest rate that you're paying, when is your first payment due, and what is that payment going to be. You should not have to leave there without them giving you really specific information. Also, just be wary about places that offer to do financing for you, like the rent to own. Just be careful what the rates are going to be and what your payments are going to be. I think a lot of times they take for granted that people just are going to do this regardless of what the terms are, and they should be accountable for making sure that the consumer understands everything about what an interest rate is, what's an APR, what are the penalty fees, what are the late fees, and are you going to, take my check and file against me criminally if this check bounces, that kind of thing. They should be able to tell you that information. Okay, so let me see. Now let's talk about options. There are places where you can go to get leads about who's making loans in your community that fit your need. And sometimes it's just the dollar amount of the loan. Sometimes you need to go to a place that allows you to have a lower credit score perhaps, or a longer payout than what your typical payout would be. At our bank, I told you we do the $2,000 loans. You have up to 4 years to pay that back, which is that's pretty generous. No, I'm sorry, 3 years. 3 years to pay that back. But 36 months on a $2,000 loan is pretty reasonable if the rate is reasonable, right? And I told you the rate for our loans are about 11 to 13%, which is, it's manageable. That's a decent rate for you to do. So there are solutions within the traditional mainstream banks if you just take the time to go into the lobbies and ask them for them, and then there's emergency assistance programs, there's nonprofits. A lot of times employers will assist with, either helping you with the small term loan or advancing your pay a little bit early. And then credit unions are a huge source for very reasonably priced loans with long-term amortizations, and they will develop a relationship with you so that you have a banker to deal with. Being a banker is kind of a dinosaur because there's not as many of us old bankers around that are there in the flesh that you can actually talk to about something. So much banking is done online now, but you just can't replace the value of going into a lobby where you get to meet face to face with somebody and get to know them. It's still, lending is still very much an active gut reaction. And when I had somebody come in the other day who had difficult credit score issues, and he had all sorts of different issues, but you could just tell this guy's working as hard as he can to get himself, get his ship righted, you know. And so I would loan money to that guy any day, because you can tell he's doing all the right things to try to correct the situation. So here's another slide that shows banks that have small dollar loans. You can see some of them have as low as $300 loans, $500 loans, $200 loans, First Convenience Bank. You'll note it says BBVA Compass. That one got bought the other day by PNC. So you've probably seen a lot of new signage go up for PNC, but that's, and this is a couple of years old, so there may have been some other name changes. My bank, for example, when I first started working here, it was called First Private Bank. Then we were bought by Iberia in 2014. We were bought by First Horizon last year. And while we're in the middle of converting to First Horizon, the paint's not even dry on the signs. And they've announced that we're going to be bought by TD Bank, which is Toronto Dominion Bank, which is out of Canada. And so next year will be TD Bank. And that's a $1.6 trillion bank. So that's the hugest bank I've ever been associated with. And I'll just have to say, I think the bigger the bank, the better products we're going to have for low income borrowers, and the better deposit products we'll have for low amount depositors, because there's a better storehouse of resources to pull from to do that. Now, one thing that's not listed on this, so here's some more of these sources where you can go for loans. And one of them that's not listed on here, but I'm going to send it to you afterward, is a group that I am so happy to have met. It's called the Society of St. Vincent de Paul. It is, they have different chapters. And so the one I live in Tarrant County. So the one I worked with, and when I told you about the lady that worked for Penske, that was all in Tarrant County. But there's a North Texas branch, and I'm going to send you the website for that. It's on one of these summaries that I'll be sending to you. The Society for St. Vincent de Paul does the coolest thing ever. They go to a bank like me, and they'll say, we're going to deposit $20,000 in your bank. And that's going to secure all loans that we make to the people that have payday loans that want to get out of them. So you'll have somebody who's drowning in a payday loan for $500, and they're paying $250 every 2 weeks to keep that $500 loan going. They come to us, we make a $500 CD secured loan, so there's no risk to this individual. That way, this individual gets to start accruing credit on their credit report. They are paying on a loan that lets them start building credit. The rate goes down from what, 800% to 3%. And so they can pay that loan off in 12 months, 18 months, and the payment, instead of being $250 or $150 every 2 weeks, they're paying $45.60 once a month, you know, and they're going to get their loan paid off. And I've practically been kissed on the mouth by every person we've done these loans for, because it saves their life when you think about what it saves in their budget. And St. Vincent de Paul does that all over the Metroplex, and banks get credit for it. I mean, it's like sort of a double-edged benefit, because banks get credit for doing these loans because those are community reinvestment loans. You're investing in lower income individuals by helping them get out of payday loans. So if you use the word CRA credit around a banker, their ears will perk up and they'll be like, oh, we want to be a part of that. So you can get just about any banker to participate in this. So even I think what we'll do now, probably as part of TD, you know, we'll be able to fund the CD ourselves for, you know, we'll donate the money to them for the CD. And just think about if we donated $50,000 to a CD to secure loans for all these individuals at, from 500, and a car loan, an automobile car loan might be $3,000 or $4,000. And so you might pay that off longer than 18 months. That might go a little bit longer, but you give them their car title back. They've got their car title and they're paying us off because their loan is CD secured. So just think of all the good that does. And so there's a lady named Roseanne Vieser who thought this program up. And I just think she's an angel on earth. And she's sort of figured out how to sell this to the different banks. And it's wonderful. So anybody or that you hear of who is suffering with a payday loan, I'm going to send you the link to St. Vincent de Paul, and you'll have my contact information too, so I can get you in touch with the right people. And they have to do an interview to make sure that they feel like you can pay back. Nobody should make a loan to someone that can't afford to pay it back. So if you can't even afford to pay back $45 a month, they're probably not going to be able to make the loan for you because they just don't want to keep creating problems for you, more problems. They want you to be successful. So they'll do that. But I just think it's a wonderful program and works really, really well. I think I've just about worn you out on the topic of predatory lending and payday loans. And so I don't know if you've got any questions or if any of you have any personal experiences with it for yourself or your families that you'd like to talk about, or and we can take this offline, and you're welcome to, I'll get you my contact information. You can.
So Susie, there are some great questions in the chat. If you can see them, I'll let you read them. If not, I can read them for you.
Oh, I told Brenda I'm really new at this technology, so I can see the chat. So
okay, yay. So go ahead and help us with those answers.
It says credit union does credit building personal loans as well. Yes, thank you, Patsy. I see. I haven't personally had accounts at a credit union in a few years, but we used to, and that was a really reasonable place for my ex-husband and I to get car loans and other kind of loans that we needed at a very reasonable rate. And yes, they do report to the credit bureau. And I think, Patsy, would you agree that they are welcoming, like they want the business. It's not the sort of place where you walk in and they'll come up with any excuse not to address you and to deal with your needs. They are community oriented, I would say.
Yes, ma'am, I would agree. I had an individual I was working with, and you mentioned they prey on low-income families, the payday lenders.
Yes.
Most of them are lacking education to begin with, so their probability of them being able to read that contract is almost zilch.
Right.
So the lady was like 67 years old, and she went in to get a loan, and she called me while she was there and asked me a question. And I said, please do not sign any documents while you're there right now. Please come and see me and I will give you options. She went to the credit union, started a credit building loan, and it made a huge difference. She had no bad credit, no credit whatsoever. So she was very
great.
Yes.
They tried to pass a rule at one of the legislative sessions recently that said that payday lenders had to have a contract either in the language of the person signing it or to be able to be read to the person in their language. You couldn't just have someone sit down who speaks Chinese and have them sign an English contract if they don't know what it even says. And it's so funny how they will vote against that because somebody will say, oh, that's too expensive. You can't expect a business to do that. That's gonna kill jobs for the payday lenders or make them lose money or something. And it makes sense. And one of the other things that we've always campaigned for is you should not be able to give a loan to somebody unless you ask them, can you pay it back? The payday lenders don't even ask you, are you employed? Do you have a salary? How are you going to pay? What is your expectation? They just make the loan because they're hoping you have no way of paying it back. That's their business plan.
That's their money.
Yeah. That's how they make their money. Okay. Question from the clubhouse. If someone is on SSI, are they still eligible for legitimate personal loans like these, not the payday loans? Yes, you can qualify based on Social Security income. You can qualify based on alimony. You can qualify based on any kind of income. You only have to tell us the income that you want to report to us. And, you don't have to report that you've got income coming in from some of these other sources. But if you need to use your SSI or alimony or, any other kind of payout to qualify for the loan, yes, you can. Absolutely. Minimum credit score. No, the St. Vincent loan program does not have a minimum credit score. It does not even pull credit on you because it is a humanistic kind of venture where they know everybody is in the situation they're in because of their own personal journey, whatever kind that is. They'll talk to them. What they usually do is they'll have someone from Catholic Charities entity first talk to the family and ask them, what's going on? What caused you to get in this situation? What's the best thing we can do for you? And then in the process, if they discover that there's a payday loan that's causing them this pain, that's when they get the micro lender people in, and the micro lender people will they'll look at their situation and say, oh, they perfectly understand. Like one time there was a lady and her husband had gone into kidney failure and couldn't work and their car broke. I mean, they just had all these things that are just legit things that happen to people every day. And they had gotten a terrible auto loan that was going to repossess their car that he used to get to dialysis, and so, it's those kinds of things. So the answer is no, they don't care about your credit score. They just want to have a conversation with you about how you got here and how we're going to get you out of this, which I think is marvelous. Okay, if I don't see any other questions, but as you can tell, I love talking about this topic. So if anybody has anything further they'd like to know about it, or just to chit chat, I love people who are interested in these topics too. So.
Susie, I was typing a question, so I'll just ask you, at your bank, at First Horizon, what would a minimum credit score be if it was a regular personal loan, not the St. Vincent de Paul loan?
650. Our policy states that we won't make a loan to someone whose credit score is under 650, but I have in the past always asked about extenuating circumstances to find out what caused that. So that if we can override that, then we will. If it's just a regular loan, they want the credit score to be over 650. But I would not discourage someone ever from coming and trying, because that's what we're here for. We're here to serve the community. Banks are obliged to make loans in their community to the people who need them. And nobody ever says you should make a bad loan. That's not the case. So when the economy tanked back in 2007, and people were saying, oh, the federal government was making us make bad home loans, that's not true. Nobody ever said to make a bad loan. They just got a little aggressive and tried to make too many loans without really checking the underwriting. But and another thing is filing bankruptcy. If you've filed personal bankruptcy, it's really hard to go back and get a loan later because people see that on your record. But don't hesitate to ask, because when you get to know people and they hear your story, it'd be better to start building back that way than to go into a payday lender and just tank yourself again.
So how many years after the bankruptcy would somebody have to wait to be considered?
Well, it falls off your record after 7 years, I believe. It would still show up on your record anytime after that. The sooner afterward, it's really hard, because when you go through a bankruptcy, what usually happens is anybody that loaned money to you loses the money. They write it off. And so a banker in all reason would not just make another unsecured loan to someone who just ditched a lot of banks with unsecured credit. It takes a special story and special circumstance and all that. But we are a people of hope and faith, as far as people are good people and there are reasons for everything. And you just can't turn someone into a number and do business with them based on a number. You have to humanize it. And,
so you would look at extenuating circumstances.
Yeah.
Awesome.
Always want to. And even if for whatever, like if my bank has as limit says, oh, we just absolutely cannot make this loan. We're not even going to let you override it or whatever. There might be other places like St. Vincent de Paul. They make small loans, not just to get people out of payday loans. They'll make loans to people. They have a micro lending unit. There's a church in South Dallas, and I can't remember the name of the church. Maybe it's Cornerstone Baptist. Freddie, I can't remember the pastor's name. But anyway, they started a credit union at that church in South Dallas to get people not going, so they wouldn't go to payday lenders in Oak Cliff. And
wow.
It's hugely successful, absolutely successful. And, it's just been a lifesaver for them. And Freddie, I cannot remember, but I do believe it might be Cornerstone Baptist Church that did that. And I've always thought I would love to see, I've been a Methodist since I got married years ago. I've always thought I'd love to see the United Methodist Women set up a micro lending agency or something. Just think if you combined forces to do that kind of thing, we could shut down the payday lenders if we would get enough people to.
That's fascinating that church did that. That's tremendous.
Yeah. It wasn't difficult. What they told me was it wasn't Freddie Haynes. That's his name. Okay, so look up Freddie Haynes and see what church he's the pastor of. My brain works on delay now after this age. And he used to come to Washington and lobby with us against payday lenders. And so that's when I heard the story about what they were doing at his church. And he said it really was not, it was hard work to start a credit union, for their church, but he said it wasn't, rocket science. It's something anybody can do. So something to think
Very
about.
Interesting.
Maybe a retired banker will do that someday.
Did anybody else want to ask a question, either in the chat or out loud? You can unmute yourself and feel free.
I did put in the chat, can you get a bank loan to pay off a payday loan?
Yes, yes.
Okay.
Mm-hmm. We would go through the same underwriting exercise we would for anyone, in that we would see, do you have a way to pay it back and a source of repayment? Usually bankers like to see two sources of repayment, and your income is your first source. And then if you lost your job, you want to see a secondary source of repayment. And that's where a lot of the low income folks get stuck, because they haven't been able to save funds. And so that's one thing the St. Vincent de Paul program is so good at. When they make you the loan to get you out of the credit problem with the payday lender, they will give you, or they'll ask you, I think, to provide $5, or I think it's $5 to open a deposit account at that bank. And then when your loan pays off, they'll put in a bonus of either $100 or 10% of the loan that you paid off to help you start saving. Like you can keep that account at no charge, put money in it the whole time you got your loan going. When the loan pays off, they reward you with a prize of some kind of money at the end. And then, you've gotten in the habit maybe of putting a little bit of money aside for rainy days. So it's a win-win, especially with getting the positive credit bureau reporting.
That's awesome. That really is a jump start for a lot of people.
Mm-hmm. Roseanne Vieser she's dynamite. she's real tiny. She reminds me, when I was in school, I had a professor who was a former nun, who was sort of like the Estelle Getty on Golden Girls. She was just a powerhouse, and that's what Roseanne Vieser reminds me of. She's not that old, so she'd probably be mad if I compared her to Estelle Getty, but she's a firecracker.
Awesome. Does anybody else want to ask anything before we wrap up?
If you want to be entertained, just go into now, I will say, let me say one more thing about this.
Sure.
We were successful in getting about 40 cities in Texas to adopt rules that kind of pulled in the payday lenders and made them do things a little bit better than what they had been doing. Dallas did it, Denton did it, the mid-cities did it where I am. All three, Hearst, Euless, and Bedford, passed it on the same night. Arlington has passed it. I think Grand Prairie has passed it, and Fort Worth, and then other cities around Texas. no, one city we were never successful in getting to consider it was Richardson. So I don't know if they've done it in the 2 years where I haven't been paying attention, but if you live in Richardson or you know someone who lives in Richardson, you might ask them if they've considered payday lending reform in Richardson. And the other city that I would really like to see do something is Louisville, because when you drive around Louisville, there are payday lenders on every corner. And I tried to do some things in Louisville, and I didn't have a connection there, so they didn't care what I thought. But if you knew somebody who is a voter in Louisville or runs a church in Louisville that would get behind asking them to do some reforms, it's really simple to do, and I can help with that. We also tried to do something in Irving, and I worked with the League of Women Voters in Irving, which is just a wonderful, wonderful group of women. And we couldn't get the city council or the mayor to give us 10 minutes to talk about payday lending. And I was really disappointed about that. So there you go. There's your challenge. Somebody bring me a connection in those two municipalities so we can try to do something there.
Well, that's certainly great work, because it's good to hear that at least 40 cities have already changed their ways. So a lot more work can follow, obviously, with a lot more cities in Texas that could use that reform, I'm sure. It would be great to get that reform.
I think Mesquite passed it. Yeah, Mesquite passed it largely because one minister I think his name is Charlie Brown. There's a minister, I think, in one of the Baptist churches in Mesquite, and he went on Facebook and shamed the Mesquite City Council into listening to him about payday lending. And I'll be doggone if they didn't pass the resolution right after that. But they weren't going to listen either. They weren't going to listen at all. And then I guess he was a pastor of a big enough church that when he went on Facebook and said, why won't the people from the city council talk about this industry that hurts our community? Something happened. So
good for him.
Yeah.
Wow. That's awesome.
So there are ways to fix things, and there are alternatives. What we need to do is educate the public. Don't just go waltzing into these payday lenders thinking, oh, this is the solution to all my problems, because it's just the beginning of the end for you when you do that.
That's the greatest line of all, the beginning of the end. It is. It just goes into a negative free fall for people who go there. Well, we appreciate you so much, Susie, and everyone who is on this Zoom. We the same page where you registered. We're going to post this full Zoom recording, so you can go back in and watch it. And all of this great information on here that Susie has shared with different banks and different links. Please feel free to go in and gather that information as well. And we can also post the actual PowerPoint separately, so these pages can probably be easier to find the information. So we can do both. We can post the actual PowerPoint and the Zoom. So, because we probably went through, through some of the screens a little quicker. So,
well, yeah, it's too much data.
Yeah, so we thank you all, and any questions you have, just please let us know. We are all here for you. And we will. You're welcome. And everyone put in a lot of people put in great comments. So Susie, thank you so much.
Thank you.
And everybody, if you have anything else that we can help with, please let us know.
Appreciate it.
Have a great
Bye,
day,
y'all.
everyone.
Thank you. It was great.
Thank you.
Thank you.
Thank you.
Bye-bye.